world of private investments has become increasingly popular among some investors, especially true in these times of heightened market uncertainty and geopolitical risk. And these investments, including private equity and credit, are also making their way into exchange-traded funds. Here to talk more about this is Brian Armour, Director of ETF and Passive Strategies Research for North America, Morningstar Research. Brian, great to have you on the program again.
Yeah, thanks. Good to be back.
This is a fascinating part of the market. I think a lot more people are becoming acquainted with it. For those who are not, let's just start with a bit of a primer. If we're talking private equity, private credit, what are we talking about?
Yeah, it's a really good question because we're seeing private markets make their way into the average investor's vernacular and in many different vehicles, including ETFs. And at some point, it's lost the nuance of what these individual investments actually are. And there's a lot of nuance there. So private equity, I think people probably envision something like buying into Apple when Steve Jobs is still running it out of his garage. But it can also mean investing in mature companies like SpaceX, which is worth hundreds of billions of dollars today. And so well, in terms of ETFs and where the average investor would get in, it'd probably be on that larger scale company, so more mature companies, but those that aren't publicly available. And then for private credit, it basically means private loans. And so there are custom terms. The due diligence is done by the lender. Everything is dictated by the originator and borrower. And so unlike public corporate bonds, those tend to be floating rate loans. The coupons will change as interest rates change, and the terms can differ significantly from traditional private credit. So in both cases, there isn't really a robust secondary market, so to speak. So investors can't easily access liquidity. Valuations don't change frequently. So it can be hard to know what your investment's worth on any given day.
All right, so we have the lay of the land now. Why are we seeing this push now when it comes to these private investments in the world of ETFs?
Yeah, well, private investments have grown significantly over the past few decades. I think the number of public stocks has shrunk. Private companies are staying private longer before going public, if they go public at all. And so that leaves some growth opportunities off the table for public equities. And so likewise, private credit, gained significant popularity after the global financial crisis, which left banks in a worse position to lend to borrowers due to capital constraints, increased regulation. So both trends really just led the private markets to expand and drove adoption by investors. ETFs are in some ways going to be maybe the last frontier because it is an odd fit, but the ETF market's grown substantially, and so I think it's just natural to see private assets make their way into ETFs.
Let's talk about that odd fit. Is it because ETFs are known for their transparency, but private assets often are not known? Is this where the fit sits? How do they start playing nice together?
Yeah, I mean, it definitely is partially transparency, and I also mentioned, the immediate liquidity issue as well. It's something that the ETF market's still working on. It's not the first time ETFs have had to adapt to liquid assets. It took considerable effort decades ago to launch the first bond ETFs, then high yield bond ETFs, bank loans. So it's a challenge that we've seen the ETF market overcome before, but it hasn't happened meaningfully yet. I think the ETF market's still working on how do you fit the lack of transparency between the underlying holdings and the ETF, which is trading intraday, like a stock throughout the trading day. So at least for ETFs that directly hold loans or stakes in private companies. So if you look at like CLOs, for example, those are up to tens of billions of dollars in net assets in the US. But the first two major attempts in the ETF market so far, from State Street, the investment grade public and private credit ETF here in the US, ErShares private public crossover ETF, XOVR. The first one holds direct loans, private credit sourced by Apollo, but it's hard to tell, what those holdings are. What are the companies that are issuing that debt even? Or if you look at their website and you look at the underlying holdings, which bonds are actually the private bonds themselves. For XOVR, it holds SpaceX as its top holding. but it's unclear what fees come with that, how it's accessing the SpaceX stock, and then also, the marks don't change, so we haven't seen the price change on its SpaceX holdings since December.
I wanted to talk to you about that because I think people understand when it comes to the public markets, if you have a particular stock based on the demand, the buyers, the sellers, corporate news, these things can move the price and it moves it in real time. If we start talking about pricing in the private markets, how are we determining that?
Yeah, so it typically comes from some version of it. In some ways, it's like the price is in the eye of the beholder in private markets. So, the way that they would look at it in terms of pricing for valuations is looking at comparable public companies or bonds, similar transactions, bottom-up valuations. But these, regardless of how they do it, they aren't priced frequently for the most part, at least traditionally. And there's a degree of discretion that can lead to divergent valuations for the same or similar investments by different managers. So we could see asset managers, flexing their low volatility track record, but that's because they can smooth out price changes. They have some discretion over those marks, so that's going to be an issue for investors to figure out. And I think the ETF market can do a lot of work in increasing transparency, liquidity, standardization, like they have for the public markets.
So if we have an investor intrigued by this conversation, taking a look at the space, what do they need to know about it? What risks could be involved?
Yeah. So number one, costs. Like I said with XOVR, it's unclear what you're paying for access to SpaceX, so that's going to be an issue. But in general, any access to private markets is going to come with a higher fee, some disclosed, some hidden, and also liquidity needs. Obviously, you could think you have a long-term time horizon, but things change in life, and so just being aware of the fact that it's going to be a challenge to sell the underlying holdings, make sure you have an ETF that has adequate liquidity as well, and then just the complexity of the underlying holdings. For whatever transparency you have, trying to parse out, how those investments will act in certain situations. But the one thing I would say is, as private markets reach everyday investors, it's going to be critical to invest with asset managers that you know and trust.